Hi, it's Jen with Care Patrol. I'm here with Lauren. Lauren, do you want to tell us a bit of what you do?
Yeah, so I'm a retirement mortgage specialist or a reverse mortgage specialist. And what I do is I educate people on how to tap into the equity in their home as usable cash and not have to make a mortgage payment.
So, Lauren, I feel like a lot of people won't do a reverse mortgage because they think, oh, then the bank can take my house.
Mhm.
What do you say to the people that are worried about that?
Yeah, so that's one of those myths, like I mentioned earlier. The bank won't take your house. The only way the bank could ever take your house or you'd get foreclosed on is if you're not paying your taxes and insurance. The reverse mortgage has a mortgage insurance premium, which makes it a non-recourse loan, which means that should the loan value ever exceed the value of the home, you're never going to owe more than the value of it. So it's just like any other mortgage. You're still on title. It's just a lien against your house like any other mortgage would be. The bank does not own your home. The only way the bank could own your home again is if you don't pay your taxes and insurance, like any other mortgage, and you get foreclosed on. So,
So, I think a common question for people is how much can I borrow on my home?
yeah, so there's a wide range. It's mainly dependent on their age, but we say roughly 30 to 55%. So, again, depending on how old they are, usually the older you are, the more you can access. If they have a current loan on their house, the reverse mortgage will pay off that loan, and then the remaining percentage is what they would get. If they don't have a loan balance, they're obviously going to get that full percentage up front, and that can be in a lump sum at closing, in a line of credit. If say they don't necessarily need cash right away at closing, they can put all of that towards the line of credit and just have it growing. They can take it in monthly disbursements. A couple different ways they can do it, but whatever they need, we can alter to help them that way.
And then what happens to that loan amount after someone passes? What happens to you borrowed 30% of your home?
Yeah, so say the home value is 800 and their reverse mortgage loan amounts at 600. Basically, when they pass away, or a lot of times we also have people who are like, I just want to sell my home and move to the beach in Florida or wherever it may be. Basically, they'll pay off that loan balance, and then the remaining equity is theirs to do whatever they'd like with. If say they do pass away, then the heirs can either buy the home for 95% of the appraised value at the time, or if they don't want to stay in the home, it's the same concept of the loan balance just gets paid off, and the remaining equity is theirs to do whatever they'd like with.
Is there any rules about how you use the money when you get a reverse mortgage?
No, it's yours to do what you'd like with. You can, go on a vacation. You can use it to remodel your home, add upgrades, things like that. But yeah, there's not a lot of limitations for the line of credit. They like I said, they usually start at a certain amount in their line of credit, and that's going to grow every year. They don't have access to that line of credit until after having the loan for a year. So the lump sum that they get at closing, say it's 50,000 they get, say they want to put that into the line of credit, they can tap into 50,000 for the first year, but the remaining that's in that line of credit, they won't have access to till after a year of having the loan.
And I guess that's when working with Care Patrol and working with the reverse mortgage specialist together is pretty key, because you're trying to figure out this is how much funds we need for this year, and this is how much I may need in the future, and making sure that you are borrowing the right amount, and
Right.
you're making kind of a long-term strategy.
Exactly, and that's the beauty of the line of credit, because it does have that growth rate. Usually the growth rate is roughly 0.5% higher than what your interest rate is. So having that grow in the background to tap into whenever they need to is very appealing for people in terms of financial planning for retirement. We just had somebody who they're, doing great financially, they're healthy, they everything's good to go there. But they actually just got a reverse mortgage because they wanted that line of credit to start growing now in case one of them needs to go into care. It's already set up in place and they can tap into it when one person needs to go, or if they want to have in-home care in the future, things like that. It's ready to go and set up, and it's one less thing that they have to do in an already difficult time.
That makes a lot of sense. That kind of brings up another question for me. How long does this process take when someone decides, oh, I'm going to need these funds?
Mm-hmm.
How long until they have like cash in hand to use those funds?
So usually, we say we can move as fast as you can get us your documents and information. Because this is an FHA mortgage, there is a counseling that is required, and they just want to make sure that you know what the mortgage is and the details, like we've already talked about. It's usually a 20-minute phone call that they have to do. So once they have their counseling done, when we get their documents from them, we'd say, we can close within 30 days or less, depending on how quickly they're moving, and we can move as quickly as need be as well.
So Lauren, thank you for all this information. It's been very helpful. If people have more questions, what's the best way to get a hold of you?
Yeah, so you can visit my website, lendinglauren.com. That has my phone number and a contact us form that you can reach out to us that way. Or reach out to Jen, and she has all my info as well.